Hi everyone, it's Stuart here again. Hope you can hear me loud and clear. We had a bit of a technical hiccup as I was going live about 10 minutes ago, but we're okay now. Hopefully everything's up and running. You can hear me loud and clear. The chart next to me here is the gold chart. We've been back over 24.50 this morning. We're at 22.40 at the moment. We've been as high as 42.65 earlier. But 24.50 was the key line in the sand this morning. A sort of a mixed day, really. We had some interesting news out of Japan earlier on this morning. Some comments from the head of the central bank there. We've had a strengthening yen. We've had silver, actually. That's why I started with the metal. Silver hit a new all-time high this morning here in the Asian session, 57.75, and we're still holding up and banging into that level at the moment, 57.65 at the moment. So we've got this nice consolidation there on this 1 hour chart, nicely above the in the upper half of the Bollinger Band since late last week, as we moved through the 55 handle quite significantly on the 28th. You see that big, strong, positive candle on the that 4 o'clock candle, London time. These are GMT times, Universal Standard Times on the chart here, guys. So obviously, no, it isn't. It's 5 o'clock. Let me just go back. That's exchange time. That's our colleagues in the Eastern Med. Let me just put it back to my time, London time. Here. So that candle there was actually the US Open, the 2 o'clock candle there from the 28th last week. So strong move, all-time highs on silver. Gold over 42.50. I know a lot of you trade gold. 42.65 has been our high this morning. We're sort of this a consolidation pattern here on the hourly time frame. If you're trading this on the, if you're using this strategy, remember this is the crossing stochastics. There's 5, 6, and 9. 10, 6, and 3 stochastics with a standard Bollinger Band 20 and 2 standard deviations, 20 candle count back on the time frame that you're using. So if you're using this on the short term scalping time frame, on the 5-minute time frame, pushing higher here outside of the Bollinger Band. So we're looking for a cross that would have gone short there at 13.45. First target, literally 5 minutes later, the Bollinger Band, then midline of the Bollinger Band. Second target hit within 10 minutes, big move down there at 2 o'clock. Then it's moved down, and then it's looking to cross. So it failed. So it's hit the outside of the Bollinger Band there, but we're moving down. We're moving out. So be careful trading that. So there we go. Right, let's have a look at the reason we're here. It was the ISM, the manufacturing PMIs, and have actually come in the last minute or so, a bit weaker than expected. Let me just put in the euro for you. It's been the dollar crosses on the forex market. So euro dollar 116.3640. So the dollar's been a wee bit weaker this morning. If we just go to the hourly chart first, you can see that the euro moved up higher this morning in the Asian and European trades. We topped at 16.50, and then we found resistance there, and we've come back down the last couple of hours, and we're down here. So again, this one's looking to cross. That would have triggered a short position on this hourly time frame there at 2 o'clock on this strategy. Look at the 5-minute scalping strategy, or 5-minute time frame on the news breaking. That's a long here. You can see that cross there. We're in the overbought area. The blue has crossed through the orange. The kind of D line have crossed, so you would have gone long on this one there, just ahead of the data if you wanted to risk that. And your stop loss could be nice and tight down here somewhere through that pivot area there, 16.25. So we're in at 16. I would have been in at 16.31. First target, the midline on the positive data. Obviously, it could have gone either way. Personally, I would have just left that and wait for the data to conclude. But certainly that system there would have triggered long. The ATR is looking for 4.5 pips, so 8-10 pips on the 5-minute time frame on that one. And again, you can't really see that. Let's change that, because I've changed the background on this one. Let's change the background of that. That's the wrong one. On the ATR. Just bear with me a second. Oh, come on, let's do it here. Can't see that line, can you, on the black background? There we are. Yellow. We've got a yellow ATR now. So there we are. There's that cross. There's the ATR. 4.7 pips times that by 2 gives you 8 and a bit, 9 and a bit pips on the entry if you're just using the ATR, 2 times the ATR. Otherwise, first target was there at 16.39. It's hit that. And drag the stop loss up as well on the back of that. So let's just have a quick look at the data that's broken. We've got this is the Forex Factory calendar. My calendar's not working this morning for some reason. But there you see, manufacturing week again. We're coming at 48.2, worse than last time and worse than expectations. Prices not as aggressive as many were thought. 58.5 from 59.5 expected. So still signs of ameliorating inflation. But the manufacturing is still in the doldrums. Remember, with these PMI data, guys, anything under 50 is a sector in contraction. If we just look at the US as an example, remember it's one of the leading economy in the world, but look at its manufacturing base being in contraction under 50. This is the key 50 here since 2023, all of 2024, save a couple of months at the beginning of the year. As the euphoria around the new president came in, and we need to move that up a bit. I say contraction for all of the and one of the worst numbers coming in for December of the year. So manufacturing not moving, tariffs. Obviously impacting local US manufacturers significantly. Obviously, data in the US has been a tad better than we've seen elsewhere in the world on that manufacturing base, but it's weak. The dollar's weakened initially on the data coming out. I say this 5-minute move to 116. Where do we get to? 116.40 on the upside. So dollar's been relatively weak today. As I said earlier this morning, we had Mr. Udia, the chairman, the governor of the Bank of Japan, following a meeting with the Prime Minister over the weekend. The new, very market-friendly, shall we say, regulation light new Prime Minister for Japan, embroiled in quite a significant political spat with the Chinese over comments about any invasion by China or a military response by China to Taiwan. Japan would respond militarily. Remember, they're a pacifist country after the Second World War, the Japanese. So it's a very significant break with protocol, but and all sorts of spats going on. I was reading about Japanese artists performing in Shanghai. The concert hall had been closed and they performed to an empty concert hall of 15,000 people were expected there. There was another theatre production from a touring Japanese company. No Chinese people were allowed to go and see it. So it's quite significant, this ongoing spat. It seemed to have been cleared late last week, but it's not the case at all. So quite a big fallout between these two big Asian economies, second and third largest economies in the world. So we'd like to see a smooth run of that, wouldn't we? But anyway, I'd say the yen has picked up on expectations. This is dollar yen, so obviously we've got weakness in the dollar anyway, but today, the strength in the yen took us all the way down to 145.66. Earlier last week we were over 56. We'd got to the daily time frame. The uptrend is very much still intact, but we've been weakening for a week with an expectation next week that the Bank of Japan will actually start to actually raise rates. The expectations are dimmed quite significantly for that to happen. But some comments last week have raised that expectation. The political pressure and spat with China can't be obviously ruled out about that. And so we've seen a weakening of the yen, a strengthening of the yen over the last few days, and a weakening of the Nikkei and particularly today, it's looking like a short position on that on an end of day basis on the Nikkei tonight. So watch my comments later on that as well, and the euro and the Swissy looking to go short against the yen as well tonight. So anyway, watch that later on. So you see, certainly a rollover. This strategy would have eventually gone short there, actually there on the 25th last week, and hit first target there in the midline of the Bollinger Band dollar yen at 155, and 155 is a key pivot area. But if this breaks, which it looks like it may be doing today, see how significant that is, because you can see the last time we were under this key 20-day moving average, the midline of the Bollinger Band here was just ahead of Takanichi getting the nod to be the next prime minister in Japan. We had this big leap in the Nikkei positively, and the big down move we've seen here over the last October and November, last 2 months for the yen. So finally a bit of a tick up, but is it just another slight move down into a key support area? Here it was 150. Now it's 155. But we were talking about 160 earlier in the year. We were at 35 year lows, I think, against the dollar yen. The euro yen also at record highs, and dollar and pound yen as well. So the yen particularly weak. Very, very close collaboration between the Bank of Japan and the government in Japan about not letting the yen weaken too much. There was lots of chatter there. Maybe some key intervention from the Bank of Japan over the Thanksgiving holiday weekend that might have added to this strengthening here over the last few days. We shall see in the fullness of time. It's something not disclosed yet, but 155 key support area for dollar yen, and we are down again today. Yen improving, but as we can see, 5 minute there trading that one. We've picked up into the US Open, so dollar buying as we got into the 154, 60, 70 zone earlier today, and we're back up to 150, back over the key 155 handle as the US trading day gets into full swing. But generally, I'd say it's been a weaker dollar. Just go back to the hourly chart and look at the other crosses. Guys, if there's any particular asset you want to have a look at other than this, let me know. There we are. What's this guy saying? God's a battle. So your journal Discord, it's amazing. Over 25 years ago. Yeah, sorry, the picture for today's YouTube and recording was a picture from, I don't know, I haven't got it here. It's actually that it's actually a post-it note, a good old 3M post-it note stuck in a pocket diary from the Financial Times from 1999, when I was sort of actively investing my own cash. February it was, wasn't it? End of February. And I've got another one. I might post the other one up for the end of 1999. Any that know what happened in 1999, it was one of those years, a bit like 2017 when it came to Bitcoin. Everything went up. Tech was very, very hot. The internet was just arriving. Telecoms companies were really, really hot stuff. But what's happened with NVIDIA and the current AI bubble is very, very similar. It's just X amount, billions of dollars bigger than it was in 1999. But yeah, it's just a post-it note. So check out the picture from the on our YouTube channel. So God's bottle, thanks very much, my friends. I appreciate that. Yeah. So I don't know how long you've been trading, my friend, but I've been saying this for donkey's years now. Trading is a mindset more than anything. It's not about charts and Bollinger Bands and the stochastics and all that sort of stuff, or even price action, or economic announcements, or President Trump, or whatever. It's about yourself. It's understanding yourself, what works for you. There's a million ways to make money in the market. There's 1,000,001 ways to lose money. We all lose money from time to time. The key to keep longevity in this market is when you lose, you just got to accept it. It's part and parcel of business. It's part and parcel of being in the market. We are risk managers. First and foremost, we are risk managers. We're not traders. We're managing our risk. We're managing our equity curve over the long term. And you've got to lose a few battles to win the war. So the end of the year is coming up. How have you done over the last 11 months? I've done really well this year again. And December might blow it all away. It's not going to, because I'm not going to let it do that. And that's the mindset that you need. But don't get desperate. You will have losing streaks, and the losing streaks will go on much longer than you anticipate. But if it works, let it run. Don't keep tweaking things. Trade the time frame, trade the assets that fit your personality, that you understand. Back in 1999, God's Val, I was in the telecoms business. I could feel the internet expanding. I could feel the investment that was going on in the telecoms companies and the mobile companies, Vodafone, Cellnet as it was called in the UK at the time. And it was just expanding massively, and it was a huge investment. And we've got a similar, to a completely different level going on at the moment with AI, and it will run and run, certainly for at least a year or two. I mean, it will pop, and there will be losers, as there is in all sort of business. But that's free markets. That's the risk of entrepreneurship, and taking that risk and taking that investment. So, anyway, that's a long time ago now. So, but thank you for your kind comments, my friend. Mindset, absolutely, always you. It's you. Get the mirror out, as I say all the time, and look in the mirror. How do you manage yourself? How can I cope with losing trades? How can I cope with losing half my account? Losing half your account is too much, guys. That's 50% gone. You need to make 100% of what you got left when you've lost 50% of what you invested. So, make it keep it simple. And that's the beauty of the prop trade. You don't have to invest a lot to get a lot of equity available. So, and that's, and the beauty of what we do here is we are rule based. So understand the rules, understand how much you're allowed to lose on a daily basis, on an account basis, on a particular asset basis, and understand that. Don't try and trade a 5-minute time frame, for instance, or let's just go down to the other extreme. Let's go down to the 1 minute. That's the hourly time, so it's not moving. Here, 1 minute time frame, the price is moving all the time. Can you cope with that? Whether you've got an automated system or whether you're trying to trade it manually, whatever the rules are for the system, you've got to follow the rules. It's just candle patterns. It's just patterns that repeat time and time again. This strategy works well on all time frames. It works better on some time frames than others. That's why it's more of a short-term basis, this one, because it's a mean reverting strategy. Mean reverting means it goes back to the average. Prices go up or prices go down, but overall you end up back to the average, back to the middle. That's sort of what the Bollinger Band shows you. This is the 20 period average price. So 20 of these candles, the average price over the last 20 candles is this orange line here. The extreme, the divergence away from the average, 2 times standard deviations is the blue line to the upside, and 2 standard deviations to the downside is the blue line at the bottom. And that's what John Bollinger created nearly 40 years ago now, back in the 80s, with his Bollinger Bands. And they give you all sorts of information, the Bollinger Bands. So you see we're positive when the upper half, we're expanding, the activity's widening. So anyway, dollar yen 155, bit of an uptick for the yen today, but if it lasts into obviously into year end. So the other key thing that's happened today is it's a month, so there's lots of rebalancing of positions. This month is traditionally quite positive for stock markets. You've probably heard of the Santa Claus rally and the January effect and all that sort of thing, and it is a real thing. And it's all to do with rebalancing of portfolios. It's all to do with tax regimes, particularly in the US, for the end of their tax year is January to December. In UK and Japan, for instance, it's April. And other parts of Europe use March as well. So, investors, profit isn't a profit till it's bagged. It's all right looking at it on a chart going up or a loss going down to mitigate your capital gains. But, it's all about, when you take the profit, when you take the loss. And the reason we tend to get a positive December traditionally in stock markets in the US is lots of US people are invested heavily. Lots of people in the US trade. It's starting to ripple out much more significantly around the world now. but the US has traditionally been the home of stock market investment. Sorry, let me just go at the S&P 500. I'll have to down on there. So, so S&P. This is the S&P 500, the world's most important stock market. 500 of the world of the US's biggest companies. A nice broad range of companies as well. Obviously, the Nasdaq is focused particularly on tech stocks, high tech stocks. They've been the big drivers of the stock markets this year and for the last few years as well. And then the Nasdaq 100, which is what this asset is here on our chart. The background looks a bit odd on there, doesn't it? It's got the look a bit white, and there we are. It's not even looks even odder now, doesn't it? Let's take that. Background completely white. Look. To reset that. That's not very nice on mine. I'm going to change that back to black. Just bear with me a second. Sorry. Solid. There we are. Oh, there we are. That's better, isn't it? Gradient. That's why it was funny. There we are. So this is the Nasdaq 100. The hourly. Sorry, it's a minute chart. If we just look at the daily chart, this is our big sell-off whilst I've been away into 24,500. 24,000, right? And then last week or so, we've rallied significantly. We've rallied to the 61.8 fib level, the key Fibonacci golden ratio level of this leg down here from the top we had at the end of October all the way down to the middle of November. And then a final week or so, a rally into the fib level. So we need to break away from here. It looked okay on Friday. We're down today. So key support is the 20-day moving average and that 50 fib level, which sits there at 25,125, is the technical analysis of that Nasdaq going into December and into this week. A break away from this fib level here at 25,370 is key if we're going to go higher, and the next resistance is 25,735 on the next fib level at the 78.6, which is not a fib level I normally use. I don't normally have that on my charts, but it's on this chart at the moment. And you can see that's near the top of the Bollinger Band as well. And then the all-time high, 26, well, not the all-time high, the recent high here at 26,240. It was the all-time high, wasn't it? Back in October, 26,200. So are we going to see a rally into the end of the year? Still 4 weeks of the year to go. God's about what we say. I trade the volume profile. Fair enough. It's not something I really got into, but I do respect people that do that. Lots and lots of you I know, particularly it's very, very popular in Asia, particularly the Indian subcontinent, where it initially started. What people argue. It's a bit like Bitcoin. Where did volume price analysis start? But yeah, volume profile. Lots of people trade that, and you're right. Yeah, it's not something I've really got into, to be honest. I know my approach works. God's battle. So I appreciate and respect everybody else's approach to trading, but it's something you should perhaps look at a bit more. Nasdaq and S&P very much correlated. Of course, they are. They're stock markets in the United States. But there's a bit of divergence, when we come to the Dow in particular. And if we're talking about short-term trading, my two favorite indexes whilst we're here are the DAX in Europe, because I'm based in London. So it moves much more readily, as far as I'm concerned, than the FTSE here in London. So I'm a DAX trader on a short-term basis. Certainly around about the European Open, the European Close. And the other one that correlates quite nicely to it is the Dow. So I tend to trade the Dow and the DAX, certainly from a cost per point basis as well. Dow and the DAX and the Nasdaq to an extent, less so the S&P 500. I use the S&P as obviously the benchmark and as much more of on an end of day basis as well. But if we're trading intraday, I'm more of a Nasdaq and DAX trader, to be honest. So you can see here in Europe, we've been, I think the markets were quite weak this morning, weren't they? Yeah, there we are. We were weak this morning. We turned around into the US Open. So where have we been? We've been as low as 23.425 there on the hourly chart. You see through there. Yeah, 23.4, so 23.500 basically is where the buyers came in for the DAX this morning. But I think it's still looking obviously weak on an end of day basis. So that big sell off we saw there, and then it's recovered not so much as not as strongly as the US markets have, and then quite a significant down day today at the start of the new month here in Germany. And the FTSE, just for completeness, 9,700 has been held. We've got new all-time highs last week, or just before I went away on holiday. 9,900 was breached just after I'd gone away, and then it rumbled out. So again, a bit like we did with the US markets, the leg lower stalled at 9,425, and you can see there how the fib levels. Everyone thinks it's made up. It's not made up. It's not magic. It's just something that works. So don't get too uptight about it. It doesn't work all the time, obviously. But look what's happened there. We breached the 50 last week. The 50. 50% retrace of the leg down, but we're struggling to get over the 61.8 fibs. So here, if there's a FTSE trade, you can see the flat 20-day moving average is sitting right at that 50 fib level as well. So 9,675, 9,685. That's a key support area there, and it's held for 3 days at the moment. We're above it, so it's looking positive, but we're struggling to break the 61.8 fib. So this is looking quite weak-bodied candles the last Thursday, Friday. But obviously, it's lower volumes. The US was closed. It was a holiday, shortened trading. So we're into the new week and nothing's happening basically in FTSE. So we need to, for action, we'd want to break above that level, 9,740, 9,740. To the upside and 9,680 to the downside. And then the next target will be the other fib levels on this leg down. But certainly that leg moved down. The move down has been certainly turned around there, the low, the 20th and the 21st of November. And we've moved back up. So there we are. So God's battle. Anybody else got anything to say, my friends? Let's have a look at some of the other indices. So weak manufacturing PMIs out of the United States has hit the dollar. Nikkei, I'm looking to take this short today. It's my trading platform. It's rallied into its 20-day. So again, another key resistance there. So this might be a short trade later on tonight. I will see how that goes. But big numbers on the Nasdaq, on the Nikkei, obviously. So the points it moves are huge, but percentages are still similar. So to a normal forex trade or other index trade. So just bear that all in mind when you see the numbers coming up. So let's just run through everything else. Obviously, while I've been away, crypto's had a hammering. Bitcoin 84,900 this morning, or back to, I should say. We got as low as 80,700 Bitcoin. And as we were saying, there's that 10th of November when I went away, it was looking pretty weak then. We'd been under the 20-day moving average since the end of October. So the first 2 weeks of November, it was pretty weak, and it's just weakened again through the key. It couldn't hold the, obviously before that, we couldn't hold the key 112,000 we talked about a long time. Then the 107,000 was a key level, and then the hugely psychological 100,000. But it isn't technically in play, the 100,000 level, but it's just a big fat round number. But it gave way quite significantly on the 13th, and then it just continued to wave lower. See how it sticks to the bottom of the Bollinger Band, moving lower, moving lower, moving lower. And excuse me. So we first touched the outside of the Bollinger Band, looking to go long there on the 14th. But as you can see, we didn't get across until the around about the 21st or the 22nd on the stochastics, the K and the D line crossing the blue line there, going above the orange line. Really confirmed on that day. It was all, I mean, you could have got in there, but you depend on to go long, depends how low you'd got your stop loss on that day. But if you'd closed, this is an end of day basis, so you should have gone long there with the stop loss down there, and then it's ran off and it's just got to target 1. And I would have had my stop loss around about there. So that second half of that trade would have been stopped out today, because we've just rejected the 20-day moving average. And you can see there, we've got a cross again. It looks like we've got a cross, so possibly to go well, no, it's not really short because we haven't touched the outside. We're waiting for another cross of the Bollinger Band, but that's a rejection. So it got to target 1 by touching the Bollinger Band, midline of the Bollinger Band, and then stop loss would have been certainly up there. If not, in fact, it might have been up there. I don't think I'd have got that aggressive. I'd probably had it around about here, and stopped out today on that one. And you can see the K and the D line crossing there. So another week day to start December for Bitcoin. So where do we go from here? Well, let's just have a look. I know a lot of you Bitcoin investors as well as traders, but the trend is very much to the downside. We're still in this, under this key lower half of the Bollinger Band, the 20 period moving average. We look at another, we look at different layout. We look at the crossing moving average strategy, and that's a big link line. This is the 21 EMA, all nicely aligned. So this is still short, still short, still short. So next target to the downside on end of day basis there at 84,750 from that low we saw. Oh, it's 5-minute chart, you fool. There we are. So we're at new lows. So if you zoom this in, look to the left. Where's the next support level around about here? Well, we're sort of petering, we're sort of pivoting through here, aren't we? And if we zoom that in a bit, you can see, well, that was a bit of a cluster there. So there was a bit of a support there. So 81,500. See those are those candles. Then we're down there at 70,000, 79,700. So 80,000, from a round number point of view, is the next support. Is the next support area really through, an area we want to look at for crypto, let's just put 80,000 in there. 80, 1, 2, 3. For Bitcoin to the downside. So where are we? So if we move forward, so we've been to test that within the last week or so on the 21st. So big down day again today. So are we going to get buys at 85,000? Doesn't look like at the moment, does it? That's a huge down day. So 80,000 certainly into play from this low support area we saw back in the spring, February and March, 80,000. And then obviously technically these obviously big volatile days, and then these lows here from the beginning of April. Remember Independence Day, Liberation Day, when we went down to 75,000. So 80,000 and 75,000, next big lines in the sand for Bitcoin support zone. One would argue the decline has been a bit aggressive, some too aggressive, but again, it'll be profits being taken, but it's a bit of a risk environment. Hence, we saw these new silver today and gold back at that 4,250 level bid as well. So Bitcoin being risk averse, and we haven't been over the 20-day EMA here since the end of October, and that was a brief 2-day rally up, a bounce of a leg down, and it continued to unwind. So the floor is far from in. For Bitcoin is my analysis on that one on an end of day basis. Energies, we're looking long. We had a meeting over the weekend, which has lifted oil markets. Yeah, absolutely, God's battle. It has crashed really aggressively, but the old phrase is don't try and catch a falling knife. If you know what that means. It's a very English American phrase, but you drop a knife, you don't try and catch it, otherwise you'll cut your fingers. This is a downtrend. It's a very aggressive downtrend, but if you're a long-term trader of crypto and Bitcoin in particular, you would expect this level. You won't be surprised about this sort of level of volatility. It can be very aggressive, very costly. Getting this wrong. It's just another asset, though, and you can apply technical analysis to it like any other asset. But just be aware, the risks are higher, the rewards are higher, but the risks are higher as well. So because we get some massive, massive days, a bit like we're having today at the moment. So a huge down day, a big bodied candle engulfing all of that price action now over the last 10 days as we hit 84,000 for Bitcoin today. So yeah, you're absolutely right. A big crash of Bitcoin, and it has crashed so hard. You're absolutely right. Sorry, I was talking about oil as well. Oil is having a good day for a change, but again, it hasn't really shaken the market at all. But my end of day strategy is looking to buy this tonight if it holds. But it might have, it's ran to $60 here, WTI, and rejecting it. But that's looking okay. But it's done that before, hasn't it? It looked okay here and it went down again. Looked okay here, went down again. It's nothing to get too excited about oil markets at the moment. The pressure remains to the downside. $57 was that low in the middle of October. We've been in to test it again in the middle of November, and we're ticking up into December at the moment. But $60 remains a key resistance zone, and it's also a pivot area, so it's not something I can get too excited about. The oil market at the moment, and Brent similarly, 63.87 today. 65 is the key. Let's put that on there. 65 is the key pivot for Brent. Brent, the global benchmark, WTI, all the American markets. Weakness to the downside. Bit of a actually that looks a bit well. I've said that, yeah. Brent stronger than WTI there. We've gapped on open this morning and moved up currently to the side. So, but anyway, that's oil markets generally weak. Nothing to get too excited about. We'll see if it triggers tonight for a long position. As I said, sterling. Dollar's been relatively weak this morning. Today, start the new month. We've got expectations. Let's bring in the Fed Watch tool here. Let's remember the CME group. Had problems with them overnight again on some markets, but to had a hold of the CME crashed last week. The data centers down in Texas, in Dallas. So 87.6% chance of a rate. That's what's hampering. Disappeared quite significantly, much lower just a few weeks ago. But here we are. It looks virtually nailed on at 88%. The Fed meet the 9th and the 10th next Wednesday. We'll be live for the Fed announcement. But it looks like, which has been the case, for the past 6 months, that they'll do another 2 rate cuts in 2025. So that looks like the consensus is coming back to where we were. A key speech by Mr. Williams from the very influential New York Fed sort of tilted things backwards that way. Also, Chris Waller, one of Trump's boys on the Fed, also talked about times are right for cutting on next week. Rumors over the weekend. That's chatter. I'm saying rumors. I didn't see it written down in the Reuters or Bloomberg's, but chatter that Trump has made his decision who he wants to be his man, the chair of the Fed. Remember, poor old Jay Powell was his man a few years ago, and he's been incredibly rude and personal about Jay Powell in the last few months, hasn't he? So another potential, or not another, but looks like, I'm going to say yes, man. I've been a bit cruel, but certainly President Trump wants rates cut much more aggressively, 100 basis points from here would see him fine. So that looks like that. But whether we get 100 basis points cut next year or not, but we are probably going to be more dovish into 2026 and a more compliant Fed, which will only fuel asset bubbles again, and that's got worried. And it's also the whole debt situation in the United States. We've had this massive record shutdown of the US government because of the allocations of spending particularly around healthcare in the United States. Those arguments are going to go on, and it's obviously midterms as well. It's 2026. It's 2 years since the firing election. We've got elections in November next year, and that'll start raising its head as we go into the new year already. The board's silly with obsession with the US elections, but that was what's going to hold markets. So rate cut expected in December. Let's just flip forward where we are now. Next meeting is the end of January, and we're expected 30% position. So 67% chance that we'll stay where we are basically. So we'll cut in. That's where we are now. 375 to 400. We'll cut it to 375, 350, 375 by 25 basis points next week, and there's a 23%, 24%, 0.25% of the whole chance of another cut in January if the data improves. Remember, we've had this backlog of data going to be rushing through in December, but if we take that manufacturing as an example, it's not all going President Trump's way. So expectations of no cut in January. Next meeting after January is March. There's nothing in February. 18th of March. That's quite a step out, obviously, but analysts have to plan for that. And there's a bigger expectation. We could near 40% chance of another cut by then in that spring timeframe. But anyway, all eyes. Short term, certainly on next week, and that's more or less nailed on as far as the market's concerned. A rate cut, and that's been priced in. Hence the weaker dollar we've seen over the last few sessions. Any more questions from anybody? Not. Well, let's just get rid of that. Sorry, let's just get rid of that. There, why we're not going there? So that was the oil markets. Let's just run through the dollar markets. So this is the daily time frame for the major dollar crosses. This is the on the screen now is the Swiss franc, which has had a really good 2025 against the US dollar, chopping around over the last couple of months as well. Now under 80, we're at 80.8035 now. The big decline we saw earlier in the year is sort of consolidating through here. So again, another one that's really pivoting through this 80. Let me just put that on there so you can see what I'm talking about. That 80 level, .80 for Swiss franc. The great proponents of negative interest rates, Swiss National Bank. So negligent inflation in Switzerland obviously hit quite significantly with tariffs of 39% of some of their luxury goods into the US. Some of that, there's been some chatter about that, I think, whilst I've been away, about that being mitigated as some Swiss companies lavished goods on the president. But .80, key pivot area for the Swiss franc. You see, technically, these lows have started to rise now as well. So the low may be in on this pair as well. But we've had a really good run to the downside. So let's, as long as we hold, that's really there. You don't want to break the candles itself. But this low, 17th of September, 20th of October and 20th, 14th of November, all getting a bit higher than it was here in September. Highs have managed to move high, but rolling over. So we've got a bit of a head and shoulders forming on that. So, but we'll see if we can break away either way to the upside. Also, that's pressure to the upside. So dollar coming back against the Swiss franc potentially there. But again, we've had a massive old run down for Swiss franc against the dollar in 2020 25. There we are. We were up here at 91, 92 for the dollar against the yen, and we've come all the way to well under 80 in September. That was that September low down, wasn't it? 78.43. Dollar yen we talked about. We won't go to there. Dollar CAD 140 is the big pivot area, but holding. We were in this range bound area here. 139.40 is the low. There's 140 itself, the blue line here, and we had been holding up there, but new high for November was 141, and we haven't been able to break. So I'm going to put that in as well while we're here. 141 is the upside double top we formed in November, and so moving down again as the dollar moved down on Friday and Thursday last week, and into test this next support zone there, 139.50 zone to the downside. But so again, sideways action into the month end. Dollar CAD. Euro 116.25. We looked at that earlier, didn't we? Similar action to the upside, more biased until all the central banks. Lots of central bank action in November. Bank of Japan first, obviously the Fed next week, Bank of England next week as well, and ECB next week. So lots going on. 16.25. Aussie 16.50, 65.50. So it's pulling away from the key 65 area. The Aussie dollar, so it's had a good 10-day run from this low at 64.40. Big day on the 26th, and it's followed through, breaking this high here. So Aussie looking pretty perky there against the dollar over the last week or so. Next upside area, 65.50 on an end of day basis, which sits just about there. 65.50. All right, just about on it. 65.50. So we need to, break over there and take us into the 65.80 and then possibly 66. But that looks a stretch too far. 65.80, 66 zone for the Aussie. The Kiwi's been under pressure this year as well. It's been quite weak, but again, found buys at 56, as we said on Friday, didn't we? And a big update also on the 26th, and we followed through into month end, and we started positively into December. So again, back into a pivot area, 57.40. So 57.50 is the next resistance zone, which sits just about there through there. So 57.50 next zone of interest, shall we call it, for Kiwi, and we tested it on Friday. We're into the zone really today as well. So break through there. You see how it's find support, pivot through there, and then the next area there was 58.15. So through the 58 area, if we break higher, but certainly the low seems to have attracted buys at 56 for the Kiwi. To the downside, where are we? I've been chatting on for an hour now, haven't we? So look at indices. We saw those earlier. We got our fib levels on these levels, so levels to watch. I talked about earlier, didn't I? On the indices, and finally, let's finish with everyone's favourite, which is gold. And we'll come down quite a bit. So this is the daily time frame. Also, we got these all-time highs up here at just shy of 4,400, and we're now at 4,226. So we have been as high as 4,265 today, but again, bid from the 24th as it's a big strong day from this consolidation zone. So I left around here. I left here on the 10th. We rallied to 4,230 zone, come back down, and the 20-day moving average has been your key support area. So it's quite a nice bounce here from the 24th and follow through buying on Friday. Not a significant candle, but it is the end of the month. Lots of, it's had a massive run So we moved lower. So again, that's another one. Obviously, these are all-time highs, but certainly that's a little leg that's over, isn't it? Get the exact distances there, and you can see what's happened. We've had a leg up, we had a small move lower. So we had a first test of 3 of the key fib levels there on the gold market. Let me zoom that in. Yeah, see where we are today. So there's the 3 of the, I mean, everybody says Fibonacci, all the lines will work out because there's so many of them. But the key 3 key ones, the 38, the 50, and the 61. 61.8 and 38.2 are Fibonacci numbers. The 50 isn't a fib level. It isn't a true Fibonacci number. It was applied to financial markets. So it's half of a move, but so it's on there. But so these 2 levels are key, and you see here the first rally to it was shortened, and then we went down. Looked like that was moving down there, didn't it? It was 3 days down there into Monday the 17th. So Thursday, big down day on the Friday the 14th, down day again on the 17th. Then it consolidated the week before last, and then it moved up there on the 24th, the end of the week. The beginning of the next week, the Monday. Tuesday, Wednesday, Thursday, Friday, and then up today through the 61.8 again. So we've tested it this time in a big move advance, and with more bias today. So next level is at 78.6, which might be a profit taken at 242.70, but certainly on an end of day basis. If I just zoom that in a bit, you can see gold is remaining bid on the weaker stock markets, but that could turn around again as well. We found a resistance there if the stock markets pick up as we run into the end of the year. But we'll see how it all pans out. And finally, let's have another talk about silver. New all-time highs today, 57.52, and we're actually moving higher again now. So new all-time highs in the last hour or so since we've been talking. For silver, 57.50, 57.60 here on our derivative chart here. So silver in bid, not only a precious metal, but a key industrial metal as well. So silver in demand as well as other precious metals. So there we go. I'll see you tomorrow. I think we're scheduled to trade the European Open tomorrow. So join me early tomorrow for that. We'll be having a look at the DAX, see how we go on the not this strategy, but on the one I prefer for is the Bollinger Bands and the stochastics on the short-term 5-minute time frame. Tomorrow, VWAP also. Open allowed. The VWAP also nice one on these short terms. That's the 5-minute. It's not. Why isn't it set? VWAP is waiting for more data. Okay, so well, it's not playing ball at the moment. Let's go down to the 1-minute time frame. It's just not right. Take it off. Move, and then I insert it. See, VWAP might be restarting it. Restarting it. Session start. No, it's not. 3 minutes. This is high-low close on the 3-minute. This one, but it's not stick there. So anyway, we'll have a look at that in the morning for the opening trades on the DAX tomorrow. So using this mean reverting strategy there. So there you go. So that was what's happened here. That would have gone long there. Target 1. A few points in there, but yeah, side with action. Okay. Any more questions, anybody? Anybody else want to have a look at anything? Let me know your trading profiles. Godspell, thanks for your comments today. I hope your volume profile approach is working for you, because that's what it's all about, guys. Find something that works for you and then milk it. Go hard, when it's running for you, when there's a strong trend, add to your positions. But always managing your risk at all times, okay? Take care, everyone. I will see you all again tomorrow. Take care. Remember, we are the prop trade. We are the grown-ups in the room. So if you haven't used us before, come and join us. We've relaunched our website, so have a quick look. Here is our you log in. This is our dashboard. Well, these are the demo accounts I've got open at the moment. It's got Trade Locker. You got we've got C Trader as well now. So all sorts of challenges, all sorts of opportunities to make money, obviously to lose money as well. But if you trade in a systematic way, trading a way that manages your risk, literally there is no ceiling to this business. Okay. So see you soon. Take care and be good. I will see you all again tomorrow for the opening trades in the DAX and the FTSE. So goodbye, everyone.